Hello, Slopers. It's Cinco de Mayo Eve here, May 4th, 2011, and wanted to do a overview of just a handful of symbols to let you know kind of what I think is going on with the market, what I think might be next. It all began here. This is silver. This is the silver futures. And of course, on Sunday, the markets opened at 3 o'clock in the afternoon my time, and equities were up a bit, metals were up a bit, kind of same old, same old. And then out of the clear blue sky, silver just plunged. And we really didn't know it at the time, but that's when all the fun was about to kick in. Very exciting next few days. A few hours later, we found bin Laden was killed, and the markets have been doing all kinds of fascinating things. The thing I find intriguing about this is an intraday graph. This is the past 10 days on a 10-minute bar chart. And we see here the giant plunge and then a just gorgeous textbook gap fill right there. Talk about a wonderful place to short where I'm pointing silver right there, because it's been in a waterfall decline ever since, just straight down. So really beautiful thing to behold, and the diminution of assets like silver, principally gold and others, have really been leading the way for equities and have made the first 3 days of May good for the bears. Let's see how long it holds up. Less dynamic, but kind of similar. It's been going on with gold. We've had a drop of about nearly $70 here. And so I watched this with interest. And as I've mentioned repeatedly, GDX is really what I'm watching more than anything else, because I think that's going to be really our best friend in terms of figuring out what's next. If we look at GDX, and let's tighten this up a bit, let's change this to like a 20-day graph. What I was, I beg your pardon, this is wrong data. Okay, GDX, there we are. If we look at this, what I was anticipating was, first we've got this supporting trend line down here, which I had drawn based on these 2 points, and it just about perfectly kissed it today. The best cash profit today from GDX. So GDX was my best instrument today. And what I've been anticipating is a rise to somewhere around just below 60. Let's call it 59.5. As you can see, I can zoom in here and draw a horizontal line. As you can see, 59.5 or so marks a support level with a huge amount of overhead supply. There are a lot of owners at these levels, and they really want to get out. So as we get closer to their entry levels, they're going to be very eager to make right with God and get out and get flat. That is great news, not only because I think it creates a huge wall for us to as protection, but also because I think it's a great tip of the hand in terms of what the market's going to do next. I don't have any longs now. I was hoping to hold on to gold and miners, maybe even a little silver, for this thrust higher. It really petered out a little too quickly today. After it touched that line, touched it just nailed it beautifully right there. Got some strength and sold off near the end. A little bit kind of a question mark on this one, but it still has the makings of a chart that could get back to 59.5, maybe even above. As far as the indexes go, the ES has lost a good 35 or so points in the past few days, and 1350 or so I think is a small line in the sand right now. The really important line is right here, which I've drawn at 1337.75. It got down there today and peaked a quarter, just one tick below it, just for fun. But that to me that's the big one. That is the one to watch, because that line is the neckline. And if, God forbid, the market regains its footing and pushes higher and higher and higher and goes on to like 1400 or something. That is the exactly what the inverted head and shoulders should do. So what the bulls are hoping and praying for is for this to have been simply a retracement to the neckline, and away we go up to 1430. I think was the measured price move. Could happen. Could happen. I'm definitely have one eye on that as a defensive posture, and will take on a very, very large spider position if I need to. Would rather not. Looking over at the Nasdaq though, which had a very similar, somewhat of a similar pattern, cruder though, it's already kind of barfed. This was a much sloppier pattern. The right shoulder here was lower than the left, and the neckline wasn't nearly as clearly defined, and it has already failed that pattern. So if any of these is going to rise, I would put my money in the ES as opposed to the NQ. The NQ already looks real sickly. Let's flip over to some daily charts here. Let's look at OIH, which I mentioned in a post today. This kind of sums up neatly, I think, a really nice opportunity in the world of energy. I had a lot of energy shorts. I've covered most of them right now because their profits were pretty satisfactory for me, and I'd rather have them waiting in the wings for a bounce. I've actually got 43 different positions in my watch list called Bear Pin. It's kind of a place that I put stocks that I want to short when the price is better. But we've got a pretty nicely defined head and shoulders pattern here with a target move to about the low 130s, around this level. I would get eager to cover were it to get to 132-135, that range. We have also, let's look at the Dow Jones Industrial Average. I actually rarely use time series, but a Sloper put up a post not too long ago showing the interesting relationship the Dow has to its time series. This is based on the bottom back in March 6, I guess. And recent instances of this series, actually quite a few times, here, 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 and like every single instance marks a turning point, kind of a base. And with a wonderful profit charge program, we can expand this. We can resize this graph and look to where the next hit is going to be. And if memory serves, it's like August 6th. Let's find out. It is on, let's just zoom in here a bit. You can see me struggle with this. August, yeah, it looks like August 5th or so. So what that would imply, if this time series holds true, is that if we do start tumbling, and breaking this trend line would be great news, but if we start tumbling, it might well not turn around until that early August date. Wouldn't that be a kick? So just, I mean, I don't put huge amounts of faith in the time series. It's kind of an interesting novel to me, but that's pretty impressive, that the number of times it's nailed it recently. A couple of other charts just to wrap things up. Interest rates have been falling. Bonds have been strong. Very interesting here. Of course, preceding the big crash, we saw rates just go to unprecedented levels. So we like to see this. We like to see the deflationary fears kick in. That's stewing. The dollar is really trying to find a base. The euro, as you can see, has been very strong for about 11 months now, and is getting up to what I consider a pretty important line in the sand. But this remains kind of strong. The dollar, conversely, is just trying its best to form some kind of base. If this thing ever gets the power to push higher to, on the UUP, let's just call it 22, if it gets some strength here, equities, I think, will just really start melting like an ice cube in the summer sun. Last thing, silver, of course, different look at silver, just the volume. To me, the volume for SLV has exceeded that of the spiders for some number of days now. That to me is extraordinary. I mean, that's like, it's just a wow to that one. For silver, which really just traded a few million shares each day a year ago, to dwarf the spider ETF, something's cooking. But This is done because we're out of time, so I'll bid you adieu. Adieu.